My name is Jamin Goecker. I'm an associate real estate broker in the state of Alaska, and my mission is to help you to build an intentional and significant legacy for yourself and your family by coaching you in real estate. And today we're going to be talking about what's going on in the Anchorage market. Around this time of year, this definitely becomes kind of a hot button topic for a lot of people as people are trying to figure out what they should do for next year. So we'll be getting into that and talk a little bit about what some of the predictions and projections are moving forward. Before we get started, though, as always, give this video a big thumbs up. It really has helped the algorithm quite a bit. And without further ado, let's jump into it. First thing we're going to look at is what's going on in the residential market. And the first thing that's going on in the residential market is that the inventory remains pretty low. Around this time last year, it was about 295 properties were available on the market. Now it's about 296. So really, it's staying right about the same. And really, that's what it's been for the past 3 years. I think in 2021, it was like 291. So you see, for the month of November, where we have the most completed information, it's staying pretty tightly clustered and the inventory remains pretty compressed. So not really seeing that changing anytime soon. The next thing we see is that the number of properties that have actually sold went from about 189 this time last year to 172 this year. So not a whole lot of changing one way or the other there. And that's kind of what we would expect in a market where, well, you know what, I'll save all that for the summary. Now, last but not least, the average sold price for Anchorage went from about $457,000 to about $482,000, which means we've seen a 5.5% increase for the average sold price year to date. Now, this really flies in the face of what a lot of people would expect. You know, you would think, okay, the interest rates have gone up, therefore the prices have to come down because people can afford to pay for the increasing prices and also pay for the higher interest rate, and that is just not what we're seeing. We'll talk about why that is in the summary, what some of the theories are as to why that is what we're seeing. But for right now, just know, yes, there is still a pretty healthy appreciation for residential properties in Anchorage. Switching gears, let's go and take a look and see what's going on in the condo market in Anchorage. The condo market has really seen a lot of movement in the past 3 or 4 years because historically we've had a glut of inventory for condos in Anchorage. That is no longer the case. It's taken a complete 180 in the other way because this time last year we had about 84 condos available on the market. Now it's 82, and you're thinking not a big deal year over year. But let's go back a couple years even before the pandemic and give you an idea here, because back then, let's do 2020, around the November timeframe. We had about 319 condos available in the market. Year before that, 380. Year before that, 423. Year before that, 441. So you see just how precipitously available inventory has just crashed in the past couple of years. And a big contributor to that is actually the interest rates going up. And because they have been going up, people have been looking more and more for affordable housing options. And condos look like a good option. And so for those who do have condos, they're actually holding on tighter to them because they just don't want to let them go because it's a more affordable option for them at the moment. Now, there's some pros and cons to condos. We can talk more about that in the summary, but that's kind of the thought process behind it. So as long as the interest rates continue to be at what is perceived as a really high interest rate, I'm not really expecting this inventory to make a whole lot of swings one way or the other moving forward. The next thing we see is that the number of condos that have actually sold did drop from the year before. It was 71 this time last year. Now it's 54. Not a huge difference. You know, you go back in time here and we see when there was about 5 times the number of properties available. We were still only selling about 60, 70 condos a year. So the fact that we're still selling about 50 for the month of November, even with the inventory being compressed as it is, really does kind of show to the demand for condos at the moment. The next thing we're going to look at is the average sold price for condos. Not surprisingly, it has gone up by about 10.6%, which is obviously a faster rate than what we're seeing on the residential side because you do see a lot more pressure for people to go find them. The more affordable housing options, and obviously supply and demand supersedes all theories that we might have as to how the economy is going to unfold. And there's more demand and less supply for condos. And so the rate at which that asset is going to increase has gone up faster than the residential side. So it's pretty much double the rate of what we've seen on the residential side. And it went from about 244,000 to 270,000 this year to date. That's not a big surprise. It is actually just about what we would expect for a market where more and more people are looking at condos as a viable option because of the higher interest rates and the sellers holding on to them even tighter, which creates a shortage. Let's go ahead and take a break real quick here. For those who've been watching for a bit, you do know that I host live stream every other Thursday where we talk with people who have recently moved to Alaska about what it's like, or I interview other industry professionals and talk about what it is that we can see for specific trends in the market, like, Airbnbs or, property taxes, interest rates, all that good stuff. And we'll be releasing more of those live streams in the upcoming year here, so do pay attention. Those are going to be coming back into the rotation very quickly here. Obviously, I've had a lot going on personally lately, but those are going to be coming back here, so do be looking for those. Last but not least, we're going to take a look at what's going on in the multifamily market. Now, the multifamily market is unique from the rest of the asset classes in Anchorage, and the reason I say that is, number one, it is multifamily, so that primary purpose is not for people dwelling in it as primary residence. It's an investment vehicle, so it's going to be a little different. It's going to behave differently as well. Just to give you an idea, this time last year, there were 50 multifamily properties available on the market. Now it's 83. So we do see a pretty sizable jump in the amount of available inventory, and that's more or less consistent for what we see for the rest of previous year. For instance, really since, we started kind of seeing a shift where there was more inventory available compared to where we were this time last year. The big shift kind of happened over in July, and since then, it's just kind of gone up and up. So really what I think is happening is a lot of new investors got into the market around the 2020 timeframe where the interest rates were really low, and they jumped into some properties that they probably shouldn't have, and now they're trying to off-sell them, but now the interest rates are higher, and that does make it more difficult to sell. So yes, looks like month over month, the inventory just keeps going up and up. I kind of suspect these are about the same properties, more or less, that we've had for the entire time, because there are some multifamily properties that are just problematic, and a lot of investors aren't going to want to touch them, and so they're going to sit on there for significantly longer. Multifamily properties usually will sit on the market for longer than a residential home anyway. Kind of in keeping with that, we see that the number of multifamily properties is sold went from 29 this time last year to 14 this year for the month of November, which that's pretty common, that we have kind of a lower month of sales around the November timeframe. I get that. We do see that it's kind of been the trend more or less that we see less multifamily properties selling this year than we saw the previous year. We had a couple months where it was a little bit higher over in August and September, but for the most part, there are less multifamily properties selling this year than the previous year. I'm sure really what you're wondering right now is what the average sold price is doing for multifamily in the Anchorage market. And what we see is that the average sold price went from about $509,000 to $492,000, which means we've seen about a 3.4% decrease in the average sold price for multifamily. So before people get too excited and start thinking they're going to start scooping up all of these multifamily properties on a discount, do understand that, a couple factors. Number one, value for a multifamily property is more closely tied to how much rents you can get and what the interest rates are, because at the end of the day, it is a math equation, and those interest rates do make a pretty big deal. So yes, I can see the higher interest rate having a detrimental impact on kind of the value and the demand for these multifamily properties. And I'm also seeing, though, that when we look at the average sold price, it is looking at all the different types of multifamily, because it includes everything from the little duplex all the way up to the big commercial 30-plex property. So it's very hard to do an average sold price. I kind of suspect that once you break those out, we've probably seen an increase for the value for these multifamily properties. One of the big reasons being that as less and less residential properties are available, more people are going to be looking at these multifamily properties as a potential option for them to get their foot in the door in real estate, to buy like a fourplex or a duplex, rent out the other units, and they just stay in that one and kind of bide their time until they can go find some single family property. And I suspect, that probably is going to become more and more of an option for people moving forward here. I'm not going to, it doesn't work for everybody. For some people, it really does work. So let's go ahead and do your summary real quick. What does all this mean for me as a seller? Well, it means that the market is still pretty solidly favoring sellers. And yes, the higher interest rates are not great. I will say historically, we're really just kind of going back to the average. We got spoiled for about a decade and a half with artificially low interest rates, and now they're kind of going back to what the historical average is. And yes, it does feel like a big change to us. And yeah, it definitely does feel that way, because not only do you have the higher interest rate, but you also do have the cost of inflation inflation and everything else kind of eating you as well. So yes, we can definitely feel it. And if you're a seller, still a good time because there's still a higher demand for homes than there is supply. Because as the interest rates go up, sellers hold on to what they have even tighter because most people refinanced a couple of years ago when interest rates were really low. So no matter how low the demand sinks because of the higher interest rates, there's a very good chance the supply is going to stay proportionally lower. If you're a buyer, this is not the doomsday, there's no hope, let's be nihilistic and just be bitter and angry at the world. There are still things you can do to make sure you set yourself up well, and I've worked with a lot of people who have succeeded at finding properties in this market that they were very happy with, where they didn't get beat up on price and the terms and everything else. They were able to find good deals that they're happy with and it's going to set them up. And they're very happy to be on the other side of this equation, because once you get to the other side and you're a homeowner, the appreciation and everything that's happening here is going to be something that you really do enjoy. So a big thing is just making sure you get to the other side of it as quick as you can, and that you're not one of the people who thinks you're just going to be really smart and wait until the perfect time comes. Now, there's a difference between waiting when it really does make sense for you to wait for your family, for you personally, where, hey, I've got way too much debt, taking on a mortgage right now is really not going to work, or, I'm only here for 6 months, a year, or whatever. Doesn't make sense for you to buy. I'm talking about the people who have the ability to purchase, but they think they're going to be smart and just wait the market out. Let me give you a word of advice from people in the investor world, and that is there's no timing the market. Okay, but there is time in the market that does give you that value. In other words, purchase and then wait. Okay, you're not going to time the market. Okay, a lot of people try that, and a lot of broke people try that, and they ended up even more broke. Don't do that. Just find something that works for you and spend as much time in it as you can, and the appreciation is 9 times out of 10 is going to go up. It's only gone backwards a handful of times in the entire history of tracking the stats for real estate, and other than that, it's just kind of been an upwards climb. For investors, as always, just make sure that you're keeping track of your numbers, and around this time of year especially, make sure you're collecting receipts and getting everything all ready for the bookkeeping that's going to be coming up here pretty quick for taxes. This is all I got for your market update. Thanks for watching. We'll see you next time.